This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what we're going to do today is answer a question that I got from a subscriber, and it's really related to change in trend. So a lot of times I'll mention we've got an ABC correction in a stock or a market, right? And so the question became, what's the difference, or how do we know the difference between an ABC correction and an actual reversal in the trend? So I want to cover that and give a few examples. The key thing is that you have to have a method that will be consistent. All right. So if you're doing this, there's a lot of different ways to do it. Okay. But I'm going to give you the strategy that I think is going to be the most consistent, going to be probably the quickest way. And one of the ways that we don't get jerked around, like the market, we don't want to get whipped with the market. We don't want to assume that there's a reversal in place, because we're using a tighter approach to a reversal, and then have the market flip right back on us. All right. So let's go ahead and get into this. Now, if you do want to learn some more about some of the techniques I talk about on this channel, I would suggest starting with the book. It's at rabilstockresearch.com/book. And also, if you do enjoy this content, please hit the like button and also subscribe. It really helps the channel. Thank you. Okay, so anyone who's been following this channel for any length of time, you know that I like to use the indices for examples, and I also like to use the Zig Zag Indicator. All right, and let me just show you this real quickly. Let me pull this up. Okay, so I'm using Stock Charts ACP. I've got the zigzag set to auto percentage. That's very important. It's set to 5 with a multiplier of 2 using the high-low. So we want it to start from the low, and then we're looking for 2 times essentially a move. Now it's saying 5%, but what I've noticed, the way they calculate this, essentially they're using the average true range of that time frame. So it's not exactly a 5% move. If you notice, the size of this zigzag is actually closer to 9%. All right, based on the average true range. It will go up and down based on what's taking place in the market. So it's very, I found it to be, just make sure that you use this auto percentage, auto style, and it's calculated from the close using the high-low. If we do all that, I think this does an excellent job of providing us good info. And what we're trying to do, whenever you use a zigzag, what you're really trying to accomplish with it is, if you were to draw yourself, if you were to draw an up move, and you essentially want to overlay your opinion of where the key swings are, right? So if I do that with this zigzag, it's basically mimicking exactly what I would do. All right. Yeah, maybe it missed one here. Maybe if I'm doing this by hand, I probably maybe have one there. As long as you're not seeing a bunch of these, like if these are happening on every single swing and you're missing stuff like that, like I don't see that as a real swing. I don't think I would have included that. All right. But this one, a little close, but I'm willing to accept that as long as I'm being consistent and following, this setup. Now, I know others, like Linda Raschke uses a 2.5%, a multiplier of 2.5 for hers. I personally, because I'm using the multiple timeframes the way I'm doing it and using a 1-to-5 ratio between the timeframes, I like the 2 instead of 2.5. I like it to be a little bit tighter. Same thing with my average true range. I use a 22 setup on my average true range as opposed to a longer one like a 3 or 2.5, because I'm using multiple timeframes. All right. So I just wanted to explain that for a minute. Now let's just look at the swings themselves, because you got to understand, I've done this graphic a number of times. You should go back and look at what I would call like a reversal of trend. I've done a lot of videos on trend reversals, like a 1, 2, 3 reversal, and what constitutes a swing change in trend. So if we're making higher highs and higher lows, and we come down and we take out a swing low, all right, that's just an alert, a potential alert that there's a shift in the trend. It's not a shift in trend. We need actually to make a lower high and then another lower low. All right. So the easy way to look at it is two lower lows would, especially if you don't have an intermittent higher high, then you've reversed the trend. Now, there's another way to do it. You can be making higher highs and higher lows, and then you make a lower high and a lower low. All right, so that's one lower low, and then we make another lower high and another lower low, and that is a reversal. All right. Now I'm going to show you this on this chart in a second, but I want to make sure you understand that a single move down and a lower high is not enough to constitute a change in trend. And in fact, we could come down here and make a higher low instead of making a lower low and turn back up, and this would be a very bullish sign. It would be a failed bear. All right. So we want to know that. Now, if you notice what happened on the last spider move, we made a slightly higher high. All right, so we took out this prior swing high here and then went straight down and made a lower low. This is a single swing to the downside. Now, if you go back and watch my Friday video on the S&P and how this had been driven down to the downside, what I said was that this looked like a long liquidation flush. It doesn't look like a reversal. It looked like a flush to the downside. And we ended up coming down into pretty big support. We got very bearish, and we've gotten a good rally. Now, I mean, it doesn't mean that we're stepping in and just loading the boat down here, but it helps to understand what is actually taking place in this decline. Now, for longer term accounts, we talked about taking advantage of this drop, right? But for trading, when the volatility is very high, it's really difficult to get in unless you're going to be a true trader and be in and out within 24 to 48 hours. I think you have to be kind of careful in this type of environment. But if we understand what is actually taking place, this was just a single leg to the downside. Now, let's just look at some historical moves and see if we can understand what's taking place. The drop in 2023, this was just a single leg down. It looked like a very violent decline and a big breakdown, but it was basically another pullback. So this was a pullback into support. This was also a pullback into support and a single leg to the downside. Now, if we go back and look at the top of 2021, before we had our bear market in 22, look at the way this topped out. We made a higher high, came down and made a lower low. And then we immediately made a lower high and a lower low. So once this happened right here, we knew that the trend had shifted. That's a trend change. All right, now there's a couple of things you can do that help with this. You can draw your trend line in, and you can keep drawing in. Like you would have drawn one here and then it went to another new high. So then you would have adjusted the trend line and you would have drawn a trend line here. And then it broke the trend line, made a lower high and a lower low. All right. Now, so that is what I call a 1, 2, 3 reversal. However, it's more important because we went to a higher high first, and that means we make a lower low. And then we made a lower high and a lower low. So we confirmed the trend looking at the swings, but it also was confirmed by the 1, 2, 3 reversal. If we look at what's taking place now, we just broke. So we broke the trend line, but we've never gotten another lower low. We've never completed the 1, 2, 3 to the downside the same way. We haven't done that. So if we make another move to the downside, that would be pretty negative. All right. Now I do want to show the Dow, which is a little bit different. Notice how this made a lower high here, slightly lower high, and then a lower low. So all we've done is what I'd call an ABC correction. That's just one leg down, lower high, lower low. All right. That's all we've done when you look at the swings. Now, if we make another lower high and another lower low, we have confirmed trend change here. All right. Again, if we go back and look at what took place here, back in 22, we made a minor peak, lower low. So higher high to a lower low, lower high, lower low. So at this point, we knew right in here, we reversed the trend to the downside. And we go through our bear market to the downside, form a base, and then finally turn things around. Now, you could also look at these type of patterns and recognize this at an ABC. This is a quick ABC correction. All right. And so you want to be aware of when we're getting those, and we're doing it above the longer term trend. So this is on a weekly chart, and we're getting these little ABC corrections taking place. Those are typically opportunities in the bigger trend. All right. So you want to understand how to go about looking at these and making sure you understand, especially with what's taking place in the spider, that this does not constitute, this could have kept dropping and dropping and dropping, and it's just considered a flush. If we look at what happened in 2020, this was you could argue that they had a little reversal here and we reversed the trend or whatever, but look at the volume. You see the difference in the volume and here? This is a total flush out. I mean, they totally blew it out to the downside and the volume just exploded for 4 or 5 weeks. This is the type of climatic volume that can cause this type of a quick reversal. This was just a single bar, and it's the reason why, yeah, we want to take advantage of these drops when everybody's bearish, but it's not like you load the boat and say, hey, the moment this turns around, we want to get going. Now, it is pushing higher, and it continues to push higher. I'm leaning towards this turning into a range, but the most important thing about what I'm trying to explain today is that we don't have any type of a reversal in the trend to the downside on this weekly chart. All right, there's no sign of a full-fledged reversal, and that means we have to be very careful about getting too bearish in this situation. If we get a move and we get a retracement that turns into something like this, so this is actually going to be a little bit higher, but let's say we get some kind of a retracement down, maybe holds the midpoint on the pullback and then turns back to the upside, we have to view this very bullishly. All right. And what I'm talking about and have been talking about with my subscribers is looking at the strongest stocks as the market pulls back. If the market pulls back in a pretty orderly way, we want to be taking advantage of the strongest stocks on the next pullback. All right. So anyway, I hope this really helps you understand the difference between a full-fledged reversal and just an ABC correction. Let me know if you have any questions.